What's going on, everyone? I hope you all had a somewhat normal Thanksgiving last week because this week we are talking about some new economic issues that are affecting the housing markets. And that's what we'll be covering today and how it could affect your future buying and selling decisions. That's coming up right now. Welcome back, everyone. I'm Rick Harrison with MVP Realty, and in today's Southwest Florida's housing market update for November 29th, 2021, I'm going to take you through some interesting stats for our local market inventory, a new 2022 to 2024 interest rate prediction that could turn some heads, and some quiet news that could get pretty loud for both buyers and sellers over the next 6 to 12 months. Plus, some important new world news you'll want to keep an eye on as we move forward in this confusing economy. But first, if you haven't already done so, make sure to subscribe and click the bell to get notified of my latest videos each week showing you everything you need to know about living, buying, and selling your first home in Southwest Florida. As always, I have a lot to cover, so let's get started. All right, so let's dive on into today's agenda for the 29th of November, 2021. We're going to be obviously taking a look at some local market analysis data that is showing some interesting information about the market and what's going on with the market conditions right now, especially down here in Southwest Florida. We're also going to look at the interest rate updates and a prediction from somebody who's actually predicting a little aggressively up to 6 rate hikes between now and 2024. So we'll take a look at his predictions and what he thinks is going to happen with the interest rates and their rise. And then also, obviously, some US and world market news that some new developments that have been happening over the last week that's are going to have a pretty big part in what happens with the rest of the economy and the housing market in 2022 and into 2023. So first, we're going to start with the market news and trends. So the predictions, there's going to be 6 rate hikes in 2 years. We're also going to be taking an inside peek at top investors' portfolios and what they're doing and what that could be suggesting for other investors, as well as what their thoughts are on the economy and the future of it. And then the U.S. world trends we're going to be looking at today is the big ones for the housing market in the U.S. First, prices are sparking the single-family home rental growth. A lot of builders and real estate investors are snatching up single-family homes in basically betting on the economy and buyers getting frustrated with house prices that they're going to go right into single-family home rentals, which are at historic demands right now. And then also U.S. rent control gains traction in a few cities. And if that does gain some traction, what could that do to the landlords, to builders, to buyers, to the economy in general? And then also in world news, the tensions between nations right now, China versus Taiwan and U.S. What's going on in Afghanistan right now, and then we also have something going on in Ukraine versus Russia, or vice versa. So those are all playing a role in the economy, and what's going on in their countries is having an effect on the rest of the world's economy as well. So let's take a look and start up with the 7-day market update. New listings, big number, down 23% this week over last week. New listings went from 549 last week to 426 this week. Sold is the real big number here. Solds are down 41%. So that's the number of homes that have gone from pending to sold. So they're no longer under contract, they've closed. That went from 873 last week to 520. So that's down 41%. That's a big drop. Extendeds up 6%, just three more than last week there, which is not a huge number increase. And then pendings are also down 31% from 1,116 last week to 775 this week. So just looking at the numbers, down 23% new listings, down 41% in sold, down pending to down 31%. Those numbers are big numbers. This week we can see that the market really has slowed down here, at least in Southwest Florida it has. So we'll have to monitor this over the coming weeks and see if this is a trend that is starting, or if this is just a blip on the radar just for this week. Interest rates are slightly up according to NerdWallet, and then again falling with that slightly down according to bank rate. So we went from 2.952 last week, NerdWallet, to 2.978. So it's not much up, 0.02% up. And then bank rate has it going down 0.02. So it's interesting how those numbers are very similar but opposite directions. Market predictions. So Phil Orlando, we're going to be actually watching a quick segment from him. Phil Orlando said he wouldn't be surprised if they speed up tapering because as I've been mentioning the last several weeks, the tapering is supposed to cut out in around June or July of 2022. He wouldn't be surprised if they speed it up. He just feels like inflation has gotten to a point where they really need to start making some serious decisions about this. But his predictions are in 2022 that we'll see at least 2 rate hikes of 0.25%, which would bring it up from 3% to 3.5%. And then in 2023, he wouldn't be surprised if we see 4 rate hikes of 0.25%. That would bring the total in 2024 to a 4.5% rate average across the board. Now, we've also been hearing from Ivy Zellman and Kerry Wood about the effects that a interest rate going from 3% to 4% with these high prices in homes, how that could be affecting, just the economy overall, but also the housing market, how it could really slow it down. It could slow down the economic recovery. So let's take a look at what Phil Orlando had to say about the situation and why he predicted those interest rate predictions. I gave you a quick overview, but let's hear right from the mouth of the man himself.
Its position has been that inflation is transitory, despite these data points showing a very different story. So do you think the central bank's response in the coming months could change on inflation?
I absolutely do. That the Fed has been, I think, to some degree, talking a good game, along with the Biden administration, in terms of the temporary or transitory nature of inflation. But if you look at what they're doing, the change in the dot plots in the June and the September meetings, the change in policy that the Fed laid out at their November FOMC meeting. They're starting their taper now, November, at a pace of $15 billion a month. At that pace, the taper would finish up at about June of next year. But given the surge in inflation that we're seeing lately, it wouldn't surprise me, frankly, if the Fed accelerated that pace of tapering. And then once the tapering is done, we would expect to see some rate increases. Our best guess is that we will see 2 quarter-point rate hikes out of the Fed in the second half of next year, and then perhaps another 4 quarter-point rate hikes over the course of calendar 23. So while the Fed is talking a good game with transitory, their actions would suggest that they understand the magnitude of the problem and that they're going to remove accommodation, at a reasonable pace over the next 2 years or so in order to try to get their hands around inflation and see if they can get that genie stuff back into the bottle.
All right. So in other news, home prices, a story came out in U.S. News. It came out in several different channels, but U.S. News was the one I pulled it from. Home prices fuel rental growth. So this article was going, and you can find the link to the article in the credits, but in the description. But the article mentioned that home builders and other real estate companies are increasingly betting that would-be home buyers, frustrated with a shortage of homes for sale and runaway prices, will settle for renting their slice of the American dream. So, in other words, they're just saying that buyers are getting so frustrated, especially first-time buyers and younger or less affluent buyers are getting frustrated with the shortage of homes and the prices that are starting to get out of control, that most builders and real estate investors are betting that they're just going to go to rent until something changes, which they're predicting isn't going to happen, which is why they're all building and buying up so many rental properties. But with that being said, the key events to keep an eye on here: in the third quarter, builders broke ground on 16,000 single-family homes slated to become rentals. All told, builders broke ground on 47,000 homes for rent over the last 4 quarters, a year-over-year increase of 17.5%. So the big story here, 47,000 homes isn't all that much, considering that we're building at least a million, 1.1 or between 1.1 and 1.4 million homes a year. So 47,000 doesn't seem like all that much. But the fact that that's what happened this past year because of what people are seeing and what these real estate investors and builders are seeing, the trends become that everybody wants to buy because they know that the prices keep rising, and ipso facto, more buyers are gonna want to start renting instead of buying the house. Now, I've heard a lot of real estate agents recently saying, they keep saying that it's never going to happen. The markets, we're just everything's solid. It's a stable market as far as loans, and the amount of red tape going on loans and qualifying for a loan now. It's just people have so much equity in their property. Blah 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 blah. All these different things that they're saying, and I get it. I can see their side, but at the same time, being somebody who is in a position right now who is looking to buy a rental property and looking at the numbers and seeing that, I mean, there are deals out there, but you need to have cash, full cash. A lot of them you need to be looking at what is it going to cost to rehab. So as far as turnkey rentals available and getting good prices where the numbers make sense for somebody who's starting to or looking to get really good deals or investments, if you're doing it with financing right now, it's really tough to find a good deal, especially the lower the financing that you're going. If you're trying to do an FHA as a first time investor, trying to find a property that makes sense number wise, that's in a location that's really desirable and it's going to get good rent, to where it makes sense to finance that much, is really hard to find right now, right? Because obviously banks aren't paying anything, even high yield bonds and things like that, high yield certificates, they're not paying much for interest. Stock markets is doing great right now, but everybody's especially with all these different stocks and cryptos, you're seeing so much volatility throughout the whole stock market. If you want something that's a solid investment that you're not going to lose money on, real estate is really one of the few places left to put your money that's got a decent return. Even commercial real estate is hard to find decent cap rates right now. A lot of that goes back to this. And factors that are driving the build for rent right now is one, the buyer sentiment, right? Buyers are frustrated with the prices and the bidding wars. There's low inventory. At least that's what everybody is saying and what it looks like. If you remember back a couple of weeks, we looked at Ivy Zellman's take on it and how she thinks we've already overbuilt, because we're seeing so many investors that we're not seeing that there's a ton of inventory there. It's just that investors are buying it and not single family homeowners. So she thinks there's going to be a reversal in that. Three, the rising home prices, obviously that contributed to the buyer sentiment. The loan interest rates being low right now, making it more affordable for people to buy homes at low interest rates, even though the prices are higher. And then on the other side of that, as we said, bank interest rates are so low, that's forcing people into what everybody likes to look at, number 6, which is hedge against inflation, which is exactly what real estate is. So, but if that is the big part, if the build to rent is the big thing that everybody's doing right now, this news story that's really starting to spark some interest in people, cities seeking rent control, which has happened, and there are several cities that still do it. But the quote from this article in Politico was Minneapolis and St. Paul. They approved ballot initiatives to enable the Twin Cities to cap rent increases. Santa Ana, California did so in October. Boston's new mayor campaigned earlier this year on restoring rent control. And then take this a step further, St. Paul, they will cap rent increases at 3% annually, regardless of inflation. And unlike most rent control laws around the country, the St. Paul initiative does not include exemptions for new buildings or for small landlords. Last week and the week before, we listened to Schiff on his take on the market, and what he had mentioned was that when you do things like this, he said that he sees as one of the tricks in the Fed's pockets right now is rent control and price control. Now, he said it didn't work in the 1970s, but he also said that if they do this, what that usually causes is it causes things like black markets where you buy and sell goods, because the prices, if you want to get the good, right, instead of waiting in line for something or waiting for it to come on back on the market, you might pay a little bit more to get ahead of the line and to buy it. So that's where you have these black markets where people start to, raise the prices, but offer it to people who are waiting. So people who are willing to pay will buy these products or services illegally on a black market because they're paying higher prices than the government is allowing. So if that happens and rent control is put on landlords, a lot of these landlords or real estate investors or builders who are over leveraged, who are building because they keep seeing the trend, just like Zillow did recently, where they saw the trend in the prices going up, the algorithm, overshot the margins that they were looking at, and they overpaid for homes, and now they're letting them go at reduced price. The same thing could happen with builders and real estate investors and landlords who are over leveraged, who paid these high prices because they expected rents to keep going up. And if that happens where there's price controls, well, they might not get the numbers that they were expecting, and they might not be able to pull in the amount of rents that they were hoping to get to cover what they're paying for the prices. So that is something. Not saying that is the case but just that is something that could happen if rent control was put in place. It is worthy to note right now there are 30 states that have banned rental caps from their state. There are 6 cities right now that do actually use it throughout the United States. So top investor portfolios. This was something that I mentioned briefly at the close of last week's housing market update. But this week, I did want to specifically point out a few investors that I've watched several different videos covering their portfolios and the changes in their portfolios over the last couple weeks. Some of the notable investors and entrepreneurs that I think it would be worth you doing your research on and taking a look at. You can find all kinds of YouTube videos right now on all of these people. But take a look at the investors. From the investor side, we have Warren Buffett. He just made some really big moves. He has a decent amount of cash that he's holding right now. And the reason I'm mentioning these people and looking into them is because look at what the really good investors are doing with their money. Where are they putting their money? Because that's going to give you an indication of what they think is going to happen in the future of the market. Otherwise, they wouldn't be putting their money in these different places. So Warren Buffett made some really big moves. Ray Dalio feels like we're in a bubble right now. He's made some big moves recently. Michael Burry has, we covered him last week and the week before, but he's made some really big moves and sold a lot of stock. And he's also starting to change up his strategy in the market right now. He feels like we're in a bubble. He's been quoted saying the biggest bubble of all time in all things. Ivy Zellman has sold some huge assets. Same with Kathy Wood. Those are the investor side. And then if you go on entrepreneur investor side, you got Elon Musk, Bezos, and Branson, each of them selling a ton of their own stock. They all said it was for various reasons. Branson was to hold up his companies. Bezos was to make I forgot what it was, something to do with the climate and a business that he has been starting to improve the climate. And then Musk sold his own stocks out of Tesla's. So Musk got 9 billion sold over the last year. Bezos 8.8 billion sold over the last couple months, and then Branson 1 billion sold. But why would you be selling these stocks? These are really high stocks. They're saying it's to raise money, but these stocks, most stocks, if the economy does start to take a dip, most stocks do fall because people get nervous. So if these stocks are at all-time highs right now and they sell a lot of their stock that they can use later on to buy back in at a lower price, that could be one of their strategies. Not saying it is, but it's worth looking into each of these portfolios. And then the key updates. So some big things that are coming up this Friday. Actually, the government does have to approve funding for funding the government. It was supposed to be done in October. They put it off to December, and now they will need to decide what they're going to be doing moving forward. We also had the Omicron variant that was announced this week that is starting to show up around the world. They're saying that it's not as it doesn't cause a severe illness, but we really don't know what the effects are, and we don't know how the government is going to respond to that. Two, obviously, Evergrande's $300 billion payment deadlines. We already know that they've defaulted on 5 payments so far, and they made the last payment recently but they have another 300 billion due, and they have new deadlines for December 28th, I believe it was, and then they also have one for the end of January. So it's going to that's something that we're going to need to watch out and see how that unfolds. Do they make their payments? Did they come up with the money? Can they continue doing so to meet their debts? Number three, top investors buy and sell moves. Take a look at those. For how the Feds adjust the bond spending, obviously the tapering and interest rates going forward. And then the thing that I don't think a lot of people are connecting is the U.S. foreign tensions right now. There's a lot of tension in foreign relations, not only between us, but between other states and governments. Uh, Us, Taiwan and China, us, Russia and Ukraine, us and Afghanistan and the Middle East. And how all that's, all these things we're involved in a little bit, and each one of those things is a major issue that could, be the first domino that starts to slow down the economy or change the dynamics of trade in general, which could eventually slow down the economy. So all those things are things to watch out for. I know I've been beating this drum for a while now, but each week we found out a little bit more information and how that's affecting the economy, and I want to make sure that you are all up to date with what's going on in the economy and what these issues and events, how they're affecting housing and buying and selling real estate in our markets. So you can find the sources: Politico.com, CNBC, NerdWallet, Bankrate, and then I also got U.S. News, the Southwest Florida MLS. I did not use any YouTube videos this week. That video that we did watch, that came from CNBC. So, well, that's this week's housing market update, and I know there's a ton of moving parts in this economy right now, so I'd love to hear your thoughts on what's going to happen with the economy and housing market over the next 12 months. Let me know in the comments below. And for any other questions, give me a call or shoot me an email at 239-310-5478 or rick@swflrelocationteam.com. If you found this video helpful, please hit that thumbs up button to let me know, and don't forget to subscribe and click the bell for more videos helping you navigate our Southwest Florida housing market. Thanks so much for watching, and I'll see you next week.